good morning. I hope that you're all doing well. I hope that you all had a fantastic week. I just want to create this weekly review for you, so let's dive into it. By the way, I'm sorry if my voice may sound a bit different or a bit tired at least, because this past week was very busy for me. I didn't sleep much, and yesterday I also or this night I also slept 6 hours. So right now I'm in full grind mode. So yeah, that's why I may sound tired. But we keep going. So let's dive into this weekly review. So here's the news of the past week. We had medium impact for the euro on Monday. Then we had high impact news on Wednesday for the dollar. Medium impact on Thursday, once. And we had high impact news on Friday. Here we can see the 4-hour chart for the E-mini S&P. We can see that the market was completing this market make sell model into this imbalanced price range. I took a long in here on, I believe it was Tuesday or Wednesday. I can't really tell anymore. But we can see that there's a breakaway gap in here, and this is just institutional order flow, which is on the downside. Why? Look at the premium rates that are being respected. Gaps stay open in here, so there's a certain heaviness to this marketplace. The market doesn't have the power or the strength to retrace deeper to then drop lower. No, it's aggressive on the downside. So what do you see? You see that the market is actually trading into this imbalanced price range right here. Why is this an imbalanced price range? You'll soon figure out. Then the market creates a market structure shift here. Then I went long, bought the retracement. No, I didn't keep the trade into this 4-hour imbalance, but I believe I closed it around halfway of this price range or something like that. I can't really remember anymore. But that was a nice long opportunity. Why? Because we know that the market doesn't just drop one-sided all the time. There must be a certain logic behind that. News is a big part of that because we know that news gets used for manipulation. This time there wasn't really any type of news that could have been used as manipulation for really large ranges. Of course, this was a large down move, don't get me wrong, but when I'm talking about large down moves, I'm talking about CPI, NFP, FOMC, all those type of days. Those are the type of news events that get used to reprice heavily on the marketplace. But anyhow, we can see that the market retraces into this imbalance, into this order block, and then the market sells off into the sell side liquidity of either Tuesday or Wednesday. And sell side liquidity got built up above a volume imbalance, and there was the strong liquidity, which created the low of the week in here. And then the market retraces and closes here. Here's the 1-hour chart. We can see that the market opens. This is on Monday. Then the market trades into this imbalanced price range during the Asia session. Then on Tuesday, the market actually trades away from it. Then finds support, so to say, in this imbalance, in this BC. Then there's a market structure shift here. So for the PM session, we can expect continuation on the upside. So what occurs? Market continues during the PM session, and then it finally closes on Tuesday somewhere within this price range. Then on Wednesday, we had that high impact news event at 10 a.m. The market trades up. Here we have an order block from the London session. This black candle. I didn't mark it, but that's an order block. And an imbalance. So on the hourly chart. So the market trades into that. And this is where on the lower time frames there could have been an entry possibility. By itself, you can also just enter based of this if you're a intro week trader, someone that is able to hold positions for a long time. I don't trade that way, but that's something that you can do. Price is fractal, so what I know about the marketplace in terms of price delivery also works on these higher time frame charts. So the market finds support in this imbalance right here, and then at 10 a.m. I don't even need to see the exact hour because I just know this big green candle is manipulation. So around 10 a.m. we saw manipulation into this 4-hour imbalance, and that was just random. Then on Thursday we saw that the market traded away from this 4-hour CB into the daily volume imbalance, purging the Monday sell side liquidity. Then on Friday, the market trades away from that, trades away from its imbalance. It retraces into this imbalance, this BC, which was also a beautiful standard deviation, a projection at least. And then we just saw this choppy type of price delivery because we had this large expansion, so expect the next day to be kind of choppy at least, or consolidation at least. Okay, so I'm just going to skip to the end of this video and just go with you through the price delivery. Of course, I can get into TradingView and show you everything, but this is also a way of doing it. So, as many of you probably know, I don't really trade on Mondays, but because I was just demo balling this whole month, I still just tried and see if I was able at least to find setups on Monday. And on Monday, I found one. I had big confirmations of the fact that this was the low of the day right here. Okay, I can't really move with my mouse because then this thing pops up, but I had big confirmations in the fact that that was the low of the day. Then the market created a market structure shift at I will just do it, no worries. Create a market structure shift here, and then the market found support in this imbalance in price, in this BC. Then the market traded away aggressively. I initially got chopped the fuck up in here. I really didn't expect this this final retracement before the move up. And to be fair, it was my fault because this was not significant displacement. I should have waited for more significant displacement and then entered, but instead I entered based on this down close candle in here. And it's my own fault, and yeah, I luckily trailed my stop to close to break even, so I don't really mind. But then I just sat and waited and saw that the market traded above this swing high or this short-term high, whatever you want to call it. Terminology can change, it can be different at least. It's about the logic that I'm trying to share with you. The market traded above this high in here, above this imbalance, this CB. So what occurs? The market retraces on the next candle, offers sell side, and then it's allowed to trade higher. And that is what I framed my entry based on. Why? Why was this true support and resistance in here? Look on the left side of the curve. This is the market maker buy model if you didn't realize that yet. There's an imbalance in here, extended to the right. I'll leave that up to you and see where the magic occurs. Then we can see that the market trades above the down close candle here. There's also sell some liquidity in here, by the way. I trailed my stop aggressively below this low because I knew that the market shouldn't get trade lower than that because the market already traded away. So maybe on the 30-second chart there was a rejection block in here or something like that. That's why this final down close candle occurred, but I don't know. I don't need to know. I at least know that my strong liquidity was obvious, which was this 1 hour CB low. That was at least one of my targets. Then the market traded away aggressively, overshoots this down close candle. This acts as true support. Why? This is an order block. Then the market retraces into that. There's a volume imbalance in here. Market trades above that, finds support in the volume imbalance. Then there's another volume imbalance in here. Market trades above this high that was pointing to. Then the market retraces over sell side and then is allowed to continue higher. So here we are on the 21st. If the quality increases. Okay, yes, here's the quality. I want to start with the beginning of this trade, at least what I saw within the marketplace. I saw that the institution order flow was bullish. Why? There was an SMT with the Dow Jones between NQ and ES, a pretty large one actually. This was Wednesday, by the way. So there was a big SMT signaling strength on NQ and ES. Then within this fractal right here, within this small piece of price action, there was another SMT between NQ and ES. Then we saw a market structure shift, another market structure shift. What is this? This is true resistance turns support. That is what I framed my entry on. Okay, I entered a bit higher because a market entered. Then the market creates this imbalance in price right here. BC stays in there for a while. And then when it traded away from that, magic occurred. And I was able to call this expansion at least. Through resistance turns support. Why? Same logic that I used in here. If you watch the latest or the weekly review from last week, you'll know why. And else, you'll have to wait for 2023. I'm not sharing stuff on the Silver Platter yet. It's simply because I just want to make sure that you put in the required work and actually listen to me and actually find or try to find the gems that I'm dropping every now and then. But here we can see that the market traded above this high. Why it was below here closed. This was a rejection block in my opinion. So the market shouldn't trade below that. It could still trade below these lows, below these bodies at least. But it should not trade below the wick. Okay, so listen. A rejection block basically means that within a certain price delivery macro, in this case within a bullish scenario, sell side liquidity gets built up below the bodies of two candles or more that closed at the exact same price level. And I want to see long wicks. Why? Well, think about it. The bulk of the volume is in the bodies. So we know that institutionals, damn, it's 8:13 while I'm recording this. That's why I'm having this voice metal. What we know is that institutions or so-called traders, at least, place their stops below support levels. But look, there are people, and there are large sums of people, that don't place their stop losses below the low, because that's where the sell side liquidity rests. No, they also place their stop losses below the closes of the body. And that's why you see me sometimes draw a red box within my execution videos, and then the market trades into that, purchases all of that sell side liquidity, and then is allowed to trade higher. Jam, jam, jam. Yeah, and on Thursday we saw another beautiful market maker buy model. Let me just zoom out for you. Or let me see. Yeah, we had this. We had support turn resistance in here, or at least a possible scenario in which support turned resistance. Then we saw bullish order flow. Why was this bullish order flow? What PD arrays are being respected? Premium or discount ones? Discount ones. It's very obvious. The market created a market structure shift here, returned to fair value with this down move, created a breakaway gap, and then I went wrong within the I would say this within the imbalanced price range, or what is now a BPR balanced price range in there, and then actually I believe I yeah here you can see me buy more at this resistance to support level. I had many of you go into the chart and see for yourself why resistance turned support, or why a ceiling became a floor. But let me show you. Look, I know what price levels are important to me. When I look at a chart, you don't see where my eyes are going. You see what I annotate on the chart. And that is why it's fun for me to make these type of execution videos, because some joker out there believes that this is just, oh, ceiling becomes a floor. That's why he knew that the market was going to trade higher here. No, that's not why I knew that the market was going to trade higher. There's something else that is important to me. This by itself, the fact that a swing high gets purged or gets traded above, and that the market retraces by itself, doesn't mean shit. It absolutely means nothing. Nothing. What makes it valid, what makes this a resistance turn support, is this. Let me go back a few frames. See, when I had my chart like this, my eyes are not focused on this. My eyes are focused on the left side of the curve. And here's another gem. What happens on the left side of the curve shows you on the right side of the curve where your setups will form and where the market will find true resistance or support. Let me take you with me. Do you see this imbalance in price? This CB extended to the right. High, low, extend to the right. What do you see? True support and resistance. And the market trades above this down close candle, and then it's just explosive on the upside. And then I got my piece of arrogance that comes out. Hee random. Yep, 70-year-old boy needs to fulfill his emotions every now and then. So here we're on the Euro chart. Yeah, Euro was consolidating. This could have been a mess if you were trading this, not gonna lie. Luckily, I didn't look at Euro this whole week, but I can see that many people got chopped up in here, not gonna lie. So we had an open, we had a high, we had a low, we had a close, of course. But look at how many point or pips they are away from each other. It's just a consolidation type of week. Why? Look, if we are on the daily chart, look, this whole price move to the upside, this expansion. I'm really struggling with the word expansion, expansion. Someone please tell me how to pronounce it properly, because oh my god. But anyhow, we had this large move upside. So, like I said, expect a consolidation type of week after a large, how would I say this, large move up or a large one-sided move. Same with daily order flow. If Thursday is, for example, a big expansion, expect Friday to either be a retracement or a consolidation. Once the two. I really don't like to trade those type of markets. Not gonna lie. Unless I have clear confirmation of a possible retracement, I'm just on the sidelines waiting, scouting for my setup. So that basically sums up this week review. I hope that you enjoyed it. I hope that you found it helpful. I wish you all happy holidays, and please take notes of what I said. Really listen to everything that I said, because I said some gems in here. And you don't learn by watching just a video. You learn by going into the charts and look at the charts that I showed in this video and annotate what I talked about. I was thinking about actually going on TradingView myself and annotating everything, but I believe that for now it is better if you just follow my voice and annotate what I point to. And then later on, when we are further with the ones that know, I will show you annotations, or at least my annotations live. So, happy holidays, be safe, and I wish you all the best. Talk to you guys soon. See ya.